Hi everyone, hope you all must be doing great. So today we are starting with very interesting topic that is called TDS, tax deducted at source. Should I call it easy? Yes, it is easy. In fact, after this lecture, you will find this chapter very easy. Because sometimes students feel that, sir, there are so many different sections over there. There are so many sections, and there are various. Each section contains some different types of provisions. So it is quite hard for us to manage with this particular chapter. I'm telling you, it is not that difficult. It is easy. So in this lecture, although it's a revision lecture, but some in some places where I'll find that the provision is quite complex or the provision is important for the examination purpose also, I'll be explaining that in detail. Don't worry about it. Second thing is that in this revision, I'll also be taking the past year examination questions and the questions which are there in MTP and RTP also, which is related to that particular. Let's say if I'm teaching you some section, a TDS section, let's say I'm teaching you 193 TDS on interest on securities. Then if there is any question which has came in the past, then I'll be discussing that question also, so that you can easily relate that what type of questions will come in examinations. Got it? So I'll make sure that after this particular lecture, you will feel very much confident in this concept of TDS, right? So should we start TDS now? Okay. First of all, I would like to discuss some important terms which are used in this chapter, right? So first, we should make our foundation strong. We should know what are the terms which are there in this TDS, so that we can easily learn those sections as well. Okay. So we understand the full form of TDS is tax deducted at source. First of all, who is this source? Source is simple, from where one is earning income. From, let's say, I am earning income. How I earn income? You purchase my Google Drive classes, you purchase my pen drive classes, and you pay me the money. So that is how I earn my income. So tell me, who is the source? You are the source for me, right? I am the assessee, I am earning income, but who is paying this income to me? So you, my customers, my clients, my students are paying this amount to me. So this is known as the person who are paying this amount to me. That person is known as source. Let's say if I'm working somewhere, I'm getting a salary. So let's say I'm working with some company. That company is paying me salary. So who is the source? That company becomes the source, right? Let's say I am a landlord. I own some houses. I own some building. I am a landlord and I get rent. Who is paying me the rent? The tenant is paying me the rent, right? So in that case, the tenant becomes the source. So simple, who is the source? The one who pays you the money. That person is the source. Let me explain it more in detail. So although I think that's quite easy, you understand who the source is. So let's say this person is earning some income. Let's say this person is earning salary, right? So who is paying salary to this person? Employer. Let's say this person is employer. This is an employee. Let me call him Mr. Joy. This is Mr. Joy. Okay. And he's an employee and he's earning salary income. So who is paying salary to this particular person? So the employer is paying salary. So this is an employer. So this person becomes the source. In case of salary, employer is the source, right? So when this employer will be paying salary to Joy, so this person becomes the source. It could be salary also, it could be other payments also, like rent. If let's say Mr. Joy is getting now not salary but any other thing like rent, this person is getting rent now. Okay, so who is paying rent? So the tenant is paying rent. So tenant becomes the source, right? Let's say this person is getting interest. So Joy is receiving interest income. Let's say he has lent some money. So he's a lender. He has lent some money and the borrower is paying him interest. So who is the source? The borrower is the source. So in this chapter, we will learn that whenever source will pay the amount, whenever the source will pay the amount, then there might be possibility that TDS provisions will get attracted. TDS provisions will get attracted. Please remember, I have used the word there might be the possibility that TDS provisions are attracted. So, what I mean by that is that if this person is getting any income, this person is getting salary income, this person is getting rental income, this person is getting interest income, whether TDS provisions will apply might be yes also and might be no also, right? It depends upon so many other factors also that we will going to learn in this chapter. Second thing is that, sir, every time should TDS be deducted in all types of payment? The answer is no. Here we will learn that only on certain payments, only on certain payments, TDS provisions will apply. Not on all payments, only on certain payments. Whenever the source will be giving you the money, if that payment is covered under TDS provisions, then only TDS provisions will apply. Otherwise, it will not apply. So let's say you are my student, you purchase my Google Drive classes or pen drive classes, and you are paying me the money. You are the source, right? So will you are paying me the money, I'm the assessee, I'm getting income, and you are the source. So will you be deducting TDS? The answer is no, because on that payment there is no TDS provisions. So if someone will ask you, if I am receiving money from various other sources, various kinds of payments I am receiving, whether on all these payments TDS provisions will apply, the answer is no. Only on certain payments TDS provisions will apply, and the payments on which TDS provisions will apply, there are some other conditions also that needs to be satisfied so that TDS will be deducted, right? So what we have understood so far, we understand who is the source is. Who the source is? The source is the one who pays us money, and it is only on certain payments that TDS provisions will apply, right? Okay. So you understand what is source is. Second is that this source, if the payment which this person is making, if it is covered under TDS provisions, if this is covered under TDS provision, so it is the source responsibility. Income tax has given responsibility to the source that you should deduct TDS if that payment is covered as per under TDS provisions, right? So this person has to deduct TDS also, and that is the reason we will call this person as TDS deductor, right? So who is the TDS deductor? If this person is making any payment, and if that payment is covered under TDS provision, then this person is responsible to deduct TDS, and this person is known as TDS deductor, and this person will be called as TDS deductee. We can simply call him deductee, right? So who is the deductor? The source is the deductor, and the person who is earning income, that person is called deductee, right? So you should know this term also, who is the deductor and who is deductee. Second thing is that this TDS deductor is first responsible to deduct TDS. So his first responsibility is that this person should deduct TDS. And whenever this person should deduct TDS, he will also deposit this TDS. His second responsibility is that deduct means that if he is making, let's say if he is making a payment of 1 lakh, let's say he is making a payment of 1 lakh, and this is covered under TDS provisions, and TDS provisions are saying that you should deduct 10% TDS. You should deduct 10% TDS. That makes 10,000 rupees, right? So he was supposed to make a payment of 1 lakh, but there were, let's say, TDS provisions, and it says 10% you should deduct. So 10,000 rupees, this person, that is 10%, he should deduct, and he should only pay 90,000 rupees to this person, right? So this 10,000, he will keep it with himself. Should he keep it with himself always? The answer is no. As soon as he should deduct this TDS, he should also deposit this TDS. When this TDS should be deposited, we'll do. But yes, his second responsibility, first responsibility is that TDS should be deducted. Second responsibility of the deductor is that whatever the TDS which he has deducted, he should deposit this also. Where he should deposit it to the income tax department. He should deposit it to the income tax department. It can be done online, and it's a very easy process, right? So one responsibility, deduct TDS. Second responsibility, deposit that TDS. Okay. He will then this person TDS deductor also has to tell the government, this person has to tell the income tax authorities, so in this month, in this quarter, I have deducted so much of TDS. Let's say this person is an employer. Let me keep it simple. This person is an employer and he pays salary to various employees. He pays salary to various employees, and whenever he pays salary to his employees, he is deducting TDS. So he'll be depositing some amount, right? And he has deposited TDS of so many people. So this person has third responsibility, that he will tell the government that, sir, in this particular period, I have deducted TDS of so many people, right? So he will also tell the income tax department, sir, his PAN number, let's say his employee was Mr. A, Mr. B, Mr. C, Mr. D. There were so many employees. So he will he will tell the government that, sir, I have deducted TDS of Mr. A, Mr. B, Mr. C. How much TDS? Under which section I have deducted TDS? So this person is responsible to file a statement also. So first responsibility is that he will deduct TDS while paying this amount. Second responsibility is that he will deposit this. Third responsibility is that he will also furnish a statement to the income tax department that we call as TDS return. So his third responsibility is that he has to furnish TDS return also. This is not ROI. This is not return of income. Return of income is something which, if any assessee who earns income, that person has to file his return of income, right? That is return of income. But this is TDS return. So whenever we deduct TDS, then we have to furnish the TDS return also. Sir, what is the frequency of this TDS return? Generally, it is quarterly. We have to file this TDS return on a quarterly basis. Whatever the TDS we have deducted during the quarter, let's say in April, May and June, then we will furnish this TDS return every quarter. That I'll be also discussing that how we deposit this, how we file this TDS return, right? So this is the third responsibility. And the fourth responsibility is that this person should issue TDS certificate. Fourth responsibility is that this person should issue TDS certificate to the deductee. Because deductee will say, sir, you are supposed to pay me 1 lakh rupees, but you have just paid me 90,000, 10,000 TDS you have deducted and you have deposited to the government. But I should receive 1 lakh rupees, but I have received just 90,000. So please give me an evidence so that I can later, when I'll be furnishing my return of income, I can later tell to the income tax authorities that, sir, my 10,000 TDS was deducted. So I need certain evidence. So the evidence is that this TDS deductor will also issue TDS certificate. So this is the fourth responsibility. This is the last responsibility of this TDS deductor, that this person should also issue TDS certificate. We understand we have TDS certificate like form number 16. Form 16 is TDS. It's nothing but TDS certificate of salary. We have, for other than salary, we have form 16A. So these are two forms. This is nothing but TDS certificate. If you are paying salary, then you have to issue form 16, that is TDS certificate. If you are deducting TDS in other sections other than salary, then form 16A. And yes, there are certain special sections also. We have for that TDS certificate, we have 16B, 16C and 16D. I'll be discussing everything here in this particular lecture, right? So do you understand what is the responsibility of the deductor? So now we understand who the source is. We understand who the deductor is. Deductor and source are almost the same thing, right? What are the responsibilities of TDS deductor? Now we know that these are the responsibilities of the TDS deductor. And one more important thing, this TDS deductor, if this person is deducting TDS, so he should have a very special number that is called TAN number. It's not PAN, it's TAN. Tax deduction account number. Tax deduction account number. So this person should possess TAN number also. How he will apply for TAN? The same way we apply for PAN number, in the same manner this person can apply for TAN number, and it will be allotted to this particular person, and it is a kind of permanent number. You don't have to apply for TAN number every year. Once you can apply and you will get the TAN number. So deductor should also have a TAN number. It is important that this person should have a TAN number, otherwise he will not be able to deduct the TDS, right? But we understand that there are certain sections where this 10 is also not required. I'll discuss those sections also with you, where this 10 is not required. There are certain sections like 194IA, 194IB, and one more section, 194M. There are three sections. I'll be discussing these sections also, where even 10 number is not required. Got it? So these are certain terms which you should know before starting this concept of TDS, right? Okay. So tell me, let's say if I ask you, let's say there is a person, Mr. Sumit. He went to KBC, Kaun Banega Crorepati. He went to a game show, right? And this Mr. Sumit is not earning any income. He is just a student, let's say. He's right now, he's not earning any income. He's just a student. So Mr. Sumit got a chance to go to KBC and he wins that fastest finger first and he comes to the hot seat in front of Mr. Bachchan. And he wins, let's say, 10 lakh rupees in KBC. In 10 lakh rupees, he wins in KBC. So, although on the screen, Mr. Bachchan used to sign that check and they used to offer 10 lakh rupees check to him. But in reality, because that is a fake check, but in reality, it will not be going from KBC, Mr. Bachchan's account. It will be going from Sony Entertainment Television's account, right? Who's the sponsor of that game show. So, when this Sony people will be releasing this 10 lakh rupees to this particular person, so Sony is the organizer of that game show. When they will be paying 10 lakh rupees, because 10 lakh rupees is the winning of this particular person, Sumit. So they will be deducting TDS. We know there is a section 194B. They will be deducting TDS and there is a TDS rate of 30%. So what they will do is they have to give 10 lakh rupees to Sumit, but they will not give 10 lakh rupees. They will deduct 30% TDS. In that section, we will learn that the rate of TDS is 30%. So how much they will deduct? They will deduct 3 lakh rupees and they will they will release out of 10 lakh, they have deducted 3 lakh and they will release rupees 7 lakh rupees to Sumit, right? This is how it happens. Okay. Now, Sumit has earned some income. If someone will ask Sumit, how much income you have earned? So will he say 7 lakh or he will say 10 lakh? So he should say 7 or 10. 7 lakh is the net amount. Please understand this carefully. 7 lakh is the net amount. This is net amount after TDS. This is net amount. That is after TDS. We generally call it net. That is after TDS. But his gross winning was how much? 10 lakh rupees. This is called gross amount. So when Sumit will be furnishing his return of income, when Sumit, because now he has earned income and his income is 10 lakh rupees, right? 7 lakh is that net amount, but the gross amount was 10 lakh rupees. So when Sumit will be computing his income and when he will be submitting his ROI, return of income. So let's say this is the return of income of Sumit, ROI of Sumit, which he is furnishing, let's say on or before the due date of ROI, this person is furnishing. So he will say that I have earned my IFOS income. This is, you understand, this is a casual income. It will go under IFOS. So he will say that I have earned IFOS income, and how much he should say? 10 lakh rupees. He should say that I have earned 10 lakh rupees income, right? It is not the net amount. It is not the net amount. It should always be the gross amount. Your income is always the gross amount. So why I am telling this to you? Because it generally asks in the examiner generally asks this from you. What he will do is, let's say in the first, generally in the first question, he will give you a profit and loss account, and he will say that this person winning from lottery, game show, quiz, or etc. is rupees 7 lakh. This is net amount. This is net amount. So you understand that first of all, this is not PGBP income. If it is written over here in P&L account, so first of all, this is not PGBP income. So take it out. 7 lakh, please take it out from PGBP and take it to IFOS. But how much you will take in IFOS? Is it 7 lakh? No. You have to take the gross amount over there. Please take the gross amount before TDS. So we understand that on winning on lottery, we know that because now we are doing TDS chapter. We know the rate of TDS is 30%. So the amount which you have received is 70%, right? 100% is the total amount. So 30% has been deducted. You are receiving 70%. So 7 lakh is the 70%. So you have to take it at a gross value. So please convert it before TDS. So you can easily do it that 7 lakh is equal to 70%. So how much it would be 100%? You will say 10 lakh rupees, right? So you always have to compute your income on gross basis. So whenever this person, Sumit, will say that how much he has earned, he will say 10 lakh rupees. So let us file his return. So let's say his IFOS income is 10 lakh rupees. He has no other income. Let's say he's a student. He has no other income. So his GTI becomes 10 lakh. And in chapter 6, say there is no deduction. Let's say total income becomes 10 lakh rupees. This total income is 10 lakh. Now you have to calculate tax on 10 lakh. So tell me how much tax is the 10 lakh. So you will ask me, sir, whether he is following default tax regime or this person is following optional tax regime, right? Because we always ask this question that while calculating this tax. But here that question is not that relevant. Why? Because this entire income is a special income. This entire income is a special income. And we understand on special income, we have special rates. And as this is a casual income, so on rupees 10 lakh, we have to pay tax at a rate of 30%, right? Whether this person is following optional regime or this person is following default regime, you have to pay 30% tax. So how much would be the tax? 3 lakh rupees. So 3 lakh would be the tax, right? And then this person will say, okay, cess will also be there 4%. So how much would be the cess? 12,000 rupees. So total it will become 3,12,000 is the tax liability. This is known as tax liability. Please remember this term. This is known as tax liability. So his tax liability is 3,12,000. Tell me whether Sumit has to deposit now 3,12,000 rupees. The answer is no, sir, because already Sony Entertainment Television has paid TDS, right, of 3 lakh. They have already deducted TDS because they have not given him 10 lakh. They have given him just 7 lakh rupees. And they have already deducted TDS of 3 lakh, and they have already deposited that 3 lakh rupees to the government also. And now they must have issued TDS certificate to Sumit. Are you able to relate all these things? So Sony Entertainment Television has issued a TDS certificate also. So Sumit will say, sir, although my tax liability, please now give a concentration on these words. So Sumit will say that my tax liability is 3,12,000 rupees, but sir, my TDS has already been deducted of rupees 3 lakh. My 3 lakh has already been deducted. So I am now going to pay 12,000 rupees. 3 lakh 12,000 was my liability. 3 lakh has already been paid through TDS. So I am not now going to pay 12,000 rupees. This is known as tax payable. This is known as tax payable. So if I ask you, what is the difference between tax liability and tax payable? What is the difference between tax liability and tax payable? So you can say, sir, tax liability is the total tax on my income. Whatever the income which I have earned, during the entire year, this is the tax liability on it, right? But how much which has already been paid through TDS, and we have some other concepts like TCS also, advanced tax also. If our tax has already been paid through those modes like TDS, TCS and advanced tax, we will get a credit of it. And whatever has been already paid, we have to pay the remaining balance. That is called, whatever the remaining balance which you now have to pay, that is called TDS payable. Let's say if some extra amount would have been deducted or paid to the government earlier also, then it would be a tax refundable case. Let's say somehow TDS of 3 lakh has been deducted, and let's say you have already paid advance tax of 20,000 also. So 3,20,000 has already been paid, but your tax liability is just 3,12,000. In that case, you will get the tax refund. That is called tax refundable. So this amount will either be, if you have to pay to the government, then it will be tax payable. If you have to get the refund from the government, you have paid extra, then in that case, it would be tax receivable. Got it? So this is an important concept. So whatever is my tax liability, we will get the credit of. We don't have to pay entire amount again, because some amount has already been deducted through TDS, and we will see TCS also, advanced tax also. So whatever amount has already been paid, we will pay the remaining amount. That is called tax payable, or if it is if we have paid extra, then we will get tax refundable. And this is also written in, although you don't have to learn this section number, but this is written in section 19. If you look at your book also, I believe that you have the book. You can easily download this book from the website. It is available in PDF format, right? This is the website. I think you must have already downloaded the book. Okay. Section 190, deduction of TDS. You don't have to learn the section number. So what it is written over here, see, whatever is your tax liability, what is your tax liability? So you understand what is tax liability now, right? The in total income which you earn during the year, the tax which is calculated, the tax which is now computed, that's what tax liability. So from tax liability, if you have already some TDS has been deducted, or TCS has been collected, or any advance tax which you have paid, Also, although I will be discussing TCS and advanced tax also with you, but right now we are just discussing TDS. But you understand these terms, right? So whatever amount has already been paid, then we have to pay the remaining balance, that is called tax payable, and it could be tax refundable also. So this is nothing but section 190, not a very important section, but yes, you should know what is tax liability, and in tax, from tax liability, if any TDS has been deducted or TCS has been collected or any advance tax has been paid, then you have to pay the remaining balance, that is called tax payable or tax refundable. Got it? Okay. Second important thing is that second important thing, please, you where you have to here you have to understand that, see, when the Sony Entertainment Television has paid the are paying 10 lakh rupees to this person, they have deducted 30% TDS. They have deducted 30% TDS. Should they deduct 30% plus cess? Also, the answer is no. Generally, because in TDS we will do some various sections, and there are some percentage written over there. In some cases, it is 30%. In 194B, B, etc., it is 30%. In some cases, it would be 5%. In some cases, it is 10%. 10% is generally used. In some cases, 194C, we have 1% or 2% also, right? 194D, 194G, 194H, we have 5% also. So whenever this deductor will deduct TDS, they will not add cess extra. No. Whatever is the percentage written over there, we will deduct only that amount. So here they have just deducted 30%. 10 lakh, 30% is 3 lakh rupees. They have not included cess. So is it that Sumit is not required to pay cess? No, he is required, because when he has filed his return, see, he has also considered the cess portion, right? He has also considered the cess portion. So his tax liability is 3 lakh plus cess. So I'm not saying that we don't have to pay cess. We have to pay cess, right? But the deductor while deducting TDS, they don't consider cess. They don't consider cess, right? Cess can be paid directly by the receiver. This person can pay the cess, right? So my point over here is that whenever you will apply those rates which are mentioned on those section, please don't consider cess. You have to deduct TDS only at those rates which are mentioned in those provisions, right? But yes, there are certain exceptions also, because you understand that Income Tax Act cannot go without exceptions. For every thing, we have certain exceptions. So if it is a case of salary in section 192, if it is a case of salary, then we consider cess also while deducting TDS. I'll discuss that also. But the general rule is, thumb rule is that if you are deducting TDS, do not consider cess, just deduct the amount which is mentioned. Thus, just deduct that percentage which is mentioned in that particular section. Don't consider cess while deducting TDS. Don't consider cess, right? Yes, there is an exception, salary. There is second exception also, but that is not in our course in intermediate, that we will do in final. But the second exception is that whenever we deduct TDS for non-residents, we don't have in our course for intermediate, we will do in final. But yes, when we are deducting TDS of non-resident, then we also consider cess. And this is something which you don't have to learn. This is very logical, because that non-resident might be sitting outside India, so he'll not come to pay their cess, right? They will not come to pay their cess. So in that case, if you are deducting TDS of any non-resident, then please apply cess also. Do consider cess also. So if that, in case if Sony Entertainment Television is deducting 30% TDS, and let's say if Sumit is a non-resident, if Sumit would have been a non-resident, in that case, Sony Entertainment Television will also consider 30% plus cess also. But since this non-resident point is not in your course, so you can leave it, right? But yes, in salary, because in salary TDS section 192 is in our course. In salary, I'll specifically mention that here you have to consider cess also. Got it? Okay. One more thing. Uh, okay. Tell me. I give you this example. I am earning income. Let's say there are so many students who are purchasing pen drive or Google Drive classes, and Are they supposed to deduct TDS? The answer is no. They are not supposed to deduct TDS because on that payment, TDS provisions are not there. So am I not earning income? Yes, I am earning income, but TDS is not deducted. So it is my responsibility. In that case, if I am getting any payment, if I am getting any payment on which TDS provisions are not applicable, so it is my responsibility that I have to pay tax myself, right? So on any payment where TDS provisions are not applicable, so it is my responsibility that I have to pay my tax. Logical, right? Second point is that let's say this person is getting salary income from this employer. Let's say this person is an employer and this Mr. Joy is an employee and he is getting salary. So in salary, we understand that there are TDS provisions also. In salary, let's say this person is paying salary, and on salary, we understand there is TDS provisions also. There is section 192. So this deductor is responsible to deduct TDS, right? Somehow it happened that he forgot to deduct TDS or he missed to deduct TDS by any reason, right? So this person has received the entire amount without TDS deducted, right? So this person has received the entire amount. Now income tax officer approaches this person, Joy, you have received this amount and TDS was not deducted. Now you have to pay tax yourself. You have to pay tax yourself. So Joy is of the point of view, sir, no, I am not going to pay tax. Why? Sir, it was my employer's responsibility to deduct TDS on salary. Sir, I have read section 192 also. So it was my employer responsibility. Why he has not deducted TDS? I am not going to pay my tax. Can Mr. Joy say like this to the assessing officer? The answer is no. If you receive any payment, although it was covered under TDS provisions, but somehow due to any XYZ reason, TDS was not deducted, then also you are responsible. You cannot deny your responsibility. Then assessing officer can recover the tax from you also. So I'm combining both these points. There are certain payments. For example, when you purchase pen, you pay me the money of pen drive or Google Drive classes. So in that case, there is no TDS, so I have to pay my taxes. But if there is any payment which I receive on which TDS provision should be there, but TDS was not deducted by any XYZ reason, in that case also it is I cannot deny from my responsibility. Although yes, deductor has not fulfilled their obligation, we will also impose some interest, some penalty on him, and we will call him assessee in default. So there is a interesting word which we give to him, assessee in default. So this will person will become assessee in default. That we will understand later. But yes, you cannot deny from your responsibility. So it is written in section 191 if you say direct payment by the assessee. So again, not a very important section to learn, but yes, you should know the provision. It says that if there is no TDS provision on any income, then it is your responsibility to deduct TDS. The same example, my Google Drive pen drive classes, it is my responsibility to pay my taxes. Second is that if there is TDS implications, but however TDS was not deducted by any XYZ reason, so you cannot deny from your responsibility also. We can recover taxes from you as well. Got it? Simple. Okay. So these are some basic points. Now you know what who is source, you know what who is deductor, you know what is TAN number. Whenever you should deduct TDS, you should have a TAN number. But yes, there is some exceptions also. Second thing, you know that whenever we will apply TDS rate, we will not consider cess. Yes, there is exception. In case of salary, we will consider cess also, right? Okay. Now we have different sections of TDS. Now formally we are starting our TDS topic. So we have sections like 192, we have to do 192, 192 is TDS on salary. Then we have section 193, this is on interest on securities. 194 dividend, 194A interest other than securities, 194B, and so on. We have to do these sections, right? So let me pick these sections one by one. Right now, I'm starting with 193. I'm starting with 193. In fact, I'll take 193, 194, and 194A simultaneously. Then I'll discuss some sections. Then I'll come back to 192 TDS on salary. Although there is no such point, I can start with TDS 192 also. But still, let us start with 193. Okay. So I've written three sections. I'll be dealing with all these three simultaneously. Section 193, because most of the things are similar in these three sections. 193, 194, and 194. 193 says, let us understand one by one. 193 says that this is interest section. Whenever you receive interest, section 193 will apply. 194 is dividend. If you receive dividend, then section 194 will apply. And if you receive interest, then 194A will apply. Sir, we understand 194 dividend is okay, but these two sections are of interest. So what is the difference between 193 and 194A? The difference is that this interest is interest on securities. So if you have invested in some securities, and then if you are receiving interest, so your TDS will be deducted in 193. So here you have invested some money somewhere, but securities are not issued to you. You are just receiving interest. So in that case, 194A provisions will apply. Now you know the difference between 193 and 194. 193 is interest on securities. So what are securities? Securities are, sir, debentures, bonds, shares also. But on shares, you will get dividend. So shares, if you have invested in shares and you are getting dividend, so it will be deducted in 194. First of all, let us also get down in these concepts. Let us discuss them in detail. Let's say first section 193, it says interest on securities. So let's say there is a person, Mr. A, and Mr. A has purchased some debentures. He has purchased some debentures of some company. Let's say he has purchased debentures of some company. Let's say he has purchased debentures of Wipro Limited. So Wipro is the source. Wipro Limited is paying interest to Mr. A. What type of interest? This is interest on debentures. I can say interest on securities. Tell me which section will come into picture, 193 or 194A? Sir, 193. Why? Because here Mr. A is receiving debenture interest. This person is receiving debenture interest. And the person who is paying this amount, who is paying this amount? Wipro Limited. So Wipro Limited is going to deduct TDS also. Let's say Mr. A is earning debenture interest. He has invested in so many debentures, and he is receiving interest of 10 lakh rupees. So this person is receiving interest of 10 lakh rupees. So in this case, section 193 says that 10% TDS will be deducted. 10% TDS will be deducted. Right. So what Wipro will do, Wipro will deduct 10% TDS. That is 10 lakh, 10% is 1 lakh rupees they will deduct, and they will release 9 lakh rupees. 9 lakh rupees is the gross amount or net amount? 9 lakh rupees is the net amount. So he will receive, Mr. A will receive 9 lakh rupees net after TDS. Mr. A will show his income as IFOS income of 9 lakh, or he should show at 10 lakh rupees. So 10 lakh gross amount, right, before TDS. So we understand that if Mr. A is running some other business also, and also he has invested in debentures. So let's say in his P&L account, if it is written over here that he has received interest on debentures, and your examiner is saying that 9 lakh rupees, and here he has mentioned it net. He will not mention that it is deducted at 10%, because we understand that we know section 193, and in 193 TDS is deducted at what rate? 10%. So we understand that 9 lakh rupees which this person has received is equal to 90%, right? Because 10% is deducted. So he has received 90%. So we will easily compute the gross value. So this 9 lakh is equal to 90%. 9 lakh divided by 90 into 100, we will get 10 lakh rupees. So his income, his IFOS income will become, whose IFOS income? Mr. A's. When Mr. A will be submitting his return of income, he will show that my IFOS income, let's say he has no other IFOS income, only this income is IFOS. So he will show 10 lakh rupees. Let's say he has PGBP income or other income that we can compute, but his IFOS income he will show as 10 lakh rupees. So he will be computing his gross total income, then deductions, then total income, then tax, whatever is the tax liability, whatever, now you understand what is tax liability, right? So whatever is the tax liability, he will say that, sir, my TDS has been deducted by Wipro. How much? 1 lakh rupees has already been deducted. So whatever is my tax payable now, I'm going to pay this amount. So he must be having a TDS certificate also. Who had issued this TDS certificate to him? Wipro must have issued the TDS certificate to him also, right? Okay. So 193, interest on securities, rate of TDS is 10%. If you have shares, if you receive dividend, in the same way I can say Mr. A has received dividend on shares. So let's say Wipro, let's say there is some other company. Let me take it Infosys. Infosys is paying dividend to Mr. A. They will deduct interest, so TDS at a rate of 10%. So 193 TDS rate is 10%, 194 TDS rate is 10%, 194A, if you are getting interest, but that interest is not on securities, that interest is not on securities, let's say that is other than securities. Other than securities, what type of interest it could be? Let's say you have invested something in bank. If you have kept some money in the saving bank account, then the bank will give you interest, right? Let's say if you have got a FD for yourself. So if you have deposited the amount in FD, will the bank will issue you any securities? The answer is no. They are not going to issue you any debentures, bonds, etc. Simple, you can get your FD done with the help. You can walk into the bank and you can get your FD done. So, but you will be receiving interest. So your interest, this deduction will be happening in section 194A, and the bank will be deducting TDS also at a rate of 10%. Here, in all three cases, the rate of TDS is 10%. Second thing, who is the receiver? The receiver should be resident. The receiver should be resident. In all three cases, the receiver should be resident. If let's say Mr. A is non-resident, if Mr. A is non-resident, then TDS under section 193 will not apply, or 194 in case of dividend, or in simple interest in case of 194A will not apply. It will be some other section. There is section 195, but that is not in course, right? So if this person is a resident only, if this person is a resident only, then only we can deduct TDS. Then only we can deduct TDS in these sections. If this person is a non-resident, we cannot apply section, these section. There would be some other section, but that is not in our course, right? Here, let's say 194A, you are receiving bank interest on your saving bank account or on your FD amount. You are getting your interest. So bank will be deducting TDS at a rate of 10% under section 194A. Even let's say two of your friends are into a partnership business. They are doing their own business and they are partners and they know you very well. So they come to you and they ask you, sir, can you lend me 5 lakh rupees? You have some money with you and you are not doing any business. You are doing your, let's say you are a salaried person and you are getting your salary income, but you have money in your bank account. And these two friends approaches you. They ask you if you can lend them 5 lakh rupees, and they also say that we will invest this in our business because we need money in our business, and they are going to pay you 12% rate of interest also. So on, let's say on 5 lakh rupees, they are going to pay you 12% interest, that is 60,000 rupees they will be paying you annually. You say it's okay because you know them, and you understand their reputation also. They are going to pay you back also, right? Generally friends don't pay it back, but still, let's say you understand their reputation and they will pay you back. So please tell me that partnership firm, those two were partners, right? That partnership firm is giving you interest. Will the TDS will be deducted? The answer is yes. Under which section? Is it 193 or 194A? So partnership firm cannot issue any securities, and they have not issued any securities to you, right? They have just get the loan. They have just borrowed the money from you. In that case, if they are paying you interest, that is not interest on securities. So they will be deducting TDS under section 194A, right? They are giving interest to partner. You are the partner of the firm. No, you are not the partner of the firm. You are the outsider, right? So in that case, if they will be giving you interest, that will be covered under 194A. So 194A will cover any type of interest that is not on securities. If it is on securities like bonds or debentures, it will be covered under 193. But if it is other interest, it will be covered under 194A. Got it? Okay. One more thing. Let's say there is a person Mrs. Z, and she is receiving debenture interest. She is receiving debenture interest from some company. Let's say the company name is Tata Motors. She has invested in Tata Motors Limited debentures, and Tata Motors Limited is paying her debenture interest. Let's say the interest amount is 2 lakh rupees. Let's say the interest amount is 2 lakh rupees. So Tata Motors is giving debenture interest of 2 lakh rupees to Mrs. Z. Tell me whether TDS will be deducted. Just by that knowledge which I have just discussed, the TDS will be deducted. Under which section? 193, 194A or 194. So 194 is dividend. Keep it aside. 194A is interest other than securities also, but right now we are receiving debenture interest. This is on securities. So Tata Motors will be deducting TDS at a rate of 10% under section 193, right? And how much they will be deducting? 20,000 rupees. 20,000 rupees they will be deducting, and they will be giving to Mrs. Z net amount of 1,80,000. You understand how 1,80,000 is arrived, right? 2 lakh minus 20,000, 180. You are receiving it. How much income Mrs. Z is earning? Gross amount 2 lakh she is earning, but she has got net amount 180, right? Let's say because Tata Motors will deduct TDS at a rate of 10% because income tax has given the responsibility to Tata Motors. If they will not deduct, we will going to now please link this with section 40 small a. What is section 40 small a? In PGBP we have done that if you are paying anything to your resident and if it is covered under TDS provisions, and if you have paid the amount without deducting TDS, then 30% will be disallowed. So Tata Motors has to deduct TDS because income tax is giving them responsibility. If they will not deduct TDS, then section 40 small a, this expenses will be disallowed to the extent of 30%, right? So Tata Motors will, however, will deduct TDS, right? But Mrs. Z is of the opinion that Mrs. Z says that I am not getting any income. I am not getting any income other than this. This is the only source of income which I have during the year. So she is of the opinion that my income, if you will file her ROI, you will find that this is Mrs. Z ROI. You will find that the only the IFOS income which she has is this one, gross amount 2 lakh rupees. GTI would be 2 lakh, total income would be 2 lakh. How much would be the tax on 2 lakh? So nil. There would be no tax on rupees 2 lakh, nil. And her tax liability will be nil. TDS has already been deducted 20,000 rupees. And in that case, she will get tax refund. Tax refundable 20,000 rupees. No problem, sir. She will get 20,000 rupees tax refund. We understand there is no problem. She will get this refund also, but she might, for that to get this refund, first of all she has to file the return of income. Second thing is that she has to wait for this 20,000 rupees. She has to wait, so it might take some time. Although now, because earlier some 5-6 years back it used to take so many months, but now the system has been streamlined, so it generally takes 20 days, 1 month, or maximum 2 months it takes, and you get the money in your bank account. So she will get the amount in her bank back. But the thing is that TDS should not be deducted at the first place. Why? Because first TDS was deducted, and then she has to get the refund. For the refund, she has to file the return of income also, because if she would not have filed the return of income, the income tax department will not issue them the refund. And she has to wait for this refund also. So in this case, there is a little hardship on Mrs. Z. There is a little hardship on Mrs. Z because she is of the view that her tax should not be deducted. Her tax should not be deducted. So here we have some sections which are introduced for relaxation purpose. So we have two sections, section 197 and section 197A. These two sections provide relaxation to the assessee. To Mrs. Z, they will provide relaxation. So what are these two sections, 197 and 197A? 197 is quite a stronger section than 197A. But here in 197, Tata Motors will say that we are going to deduct the TDS. but Mrs. Z is of the opinion that please don't deduct my TDS. So she has some options. First of all, she will go for a soft option. Soft option is 197A. 197A is an easy option. Here, 197A says, but it has some conditions. It says that if your income, 197A says that if your income is not more than basic exemption limit, if your income is not more than basic exemption limit and your tax liability is nil, it says two things. First of all, your total income should not be more than basic exemption limit and your tax liability should be nil. It should be nil, not even 1 rupee. It should be nil, right? And your income should not be more than basic exemption limit. In that case, the income which you are getting from this particular person should not be more than basic exemption limit. So in that case, if these two conditions are satisfied, then you can take the help of section 197. So here, Mrs. Z is getting just 2 lakh rupees from Tata Motors. Yes, the income which she is getting is not more than 2 lakh rupees. The tax liability will be nil. Both the conditions are getting satisfied over here. So in this case, 197A is quite an easy section to adopt. She will simply give a declaration to Tata Motors. That she will declare, sir, I don't have income which is more than basic exemption limit. Whatever I receive from you is also not more than basic exemption limit. My tax liability is nil. So please do not deduct the TDS. And if Tata Motors find this declaration sufficient, they are happy with this declaration, they will not going to deduct the TDS. This is section 197A. So here Mrs. Z has to just intimate to the deductor, to the source. They have just intimated to the source that please do not deduct my TDS. Why? Because my income which you are paying is not more than basic exemption limit and my tax liability will be nil. So she will simply file a declaration. This declaration is filed in form 15G. So she can file a declaration form 15G. Here, is she required to consult the assessing officer? She is required to go to the income tax department? No, she can simply go to the deductor. She can simply go to the deductor and she can ask that please don't deduct my TDS because the income which you are paying Tata Motors to me is not more than basic exemption limit and my tax liability is also nil. Then I can take this 197A and she can file form 15G to him. In that case, if they receive form 15G, they are not going to deduct TDS. This is what is written in section 197A, right? Okay. Second thing is that, let's say Tata Motors is giving rupees 4 lakh rupees as debenture interest to Mrs. Z. They are giving 4 lakh rupees to Mrs. Z and they will be deducting 10% TDS. How much? 40,000. So now they are deducting 40,000 rupees TDS, right? Okay. Here, can Mrs. Z say, okay, first of all, calculate the tax liability of Mrs. Z. Let's say she is coming under default tax regime or normal optional tax regime also. Then we understand on 4 lakh, there will be some tax liability, but it will not be because we have rebate section also. If she is following optional tax regime, then 5 lakh limit. If she is following new tax regime, then we have 7 lakh rupees limit. His tax liability will ultimately be nil. Her tax liability, will ultimately be nil. So in that case, can she go and get the relaxation of section 197A? Can she go and file form 15G? The answer is no. Why not? Because these two conditions must be satisfied. First condition is that the income should not be more than basic exemption limit. Please tell me this condition is not getting satisfied because the income which she is receiving is 4 lakh rupees. If she is following optional tax regime, it is more than 2.5. If she is following default tax regime, it is more than 3 lakh rupees. So in that case, the income which we understand that the second condition is satisfied. Why? Her tax liability will be nil because of section of rebate, right? But her income which she is getting from Tata Motors is not less than the basic exemption limit. So in that case, she will not be able to file form 15G. Section 197A will not be applicable in that case. She will not be able to take the help of 197A. In that case, she can go and take the help of 197. I'll be discussing 197 after a couple of minutes. But first, understand one more thing. This 197A says one thing more. It says that if this person is a senior citizen, if this person is a senior citizen, resident senior citizen, in that case, we are not going to see this particular condition. We will only see this condition. I'm talking about section 197A only. Section 197A says that the person who is receiving income, if this person is a resident senior citizen, then we will not see this condition. This condition is not relevant. Then only we will see this condition. Tax liability should be nil. Even if you are getting the amount which is more than the basic exemption limit, but if your income tax is coming zero, then you can claim this particular section. But in that case, it will not be form 15G. In that case, it would be form 15H, right? So form 15H is for which type of person? It is only for senior citizens, for residents. And you understand, whenever the senior citizen relaxation is given to the income tax department, it is only and only for resident, not for non-resident. Okay, so 15H will say that it will not see this condition. It will say if the tax liability is nil. So in that case, if let's say Mrs. Z, let's say she's a senior citizen, even if she is receiving 4 lakh rupees, but her tax liability would be zero, she can get this relaxation of section 197A. So to summarize, 197A, we don't have to go anywhere. We just have to tell our deductor. We just have to tell our source that, sir, my income is not more than basic exemption limit and my tax liability is zero, then I'm filing 15G. But the people who are eligible to file 15H, we will see only this particular condition. We will not see this condition. I hope this is clear to you, section 197A. Second point is that whether 197A this relaxation can be taken in all types of TDS sections. The answer is no. It can only be taken in some of the sections. These three sections which I was discussing with you, in this section, 197A benefit can be taken. 197A benefit can be taken. That is, if you are not a senior citizen, you can file 15G. If the person is a senior citizen, they can file 15H. And where they have to file it? To the income tax department, to the assessing officer? No, just to the deductor. They can approach the deductor and they will say, sir, please do not deduct our TDS because our tax liability is nil. And for 15H, even the amount which you are receiving can be more than basic exemption limit. But the thing is that second condition should be satisfied. Your tax liability should be nil. I believe that you got this section 197A. Next section, the second section was section 197. The 197. If let's say there are certain sections where even 197A relaxation is not there, but 197 is there, right? But this is not very important for the examination that you have to learn where 197 is there, 197 is there. This is not that important for examination. We have some other important things also in this chapter, but yes, you should know about these sections. Let's say if person is not able to get the relaxation of 197A, let's say either his income which this person is getting is more than basic exemption limit, or the tax liability is not nil. Tax liability is something which is coming, let's say 2,000 rupees, 3,000 rupees, 4,000 rupees, but it is not that much. Let's say let me give you an example. Okay, let's say Mr. Y, he is following optional tax regime. And he is getting, let's say, debenture interest from Tata Motors. And this person is not a senior citizen also, right? His age is, let's say, 50 years. He is not a senior citizen. And this person is getting debenture interest from Tata Motors. So Tata Motors is giving him debenture interest, let's say, of rupees 7 lakh. They are paying 7 lakh rupees to him. So Tata Motors will say, we are giving you debenture interest under section 193. We are going to deduct 10% TDS. So how much TDS they will deduct? 70,000 rupees. Okay. This person is following optional tax regime. So let's say he has no other income. This is the only income which he has. So first of all, tell me how much he will receive. So he will receive 6,30,000. That is net amount. But please tell me, he will show how much income as IFOS. He will show the gross amount, that is 7 lakh rupees. So his IFOS income will be 7 lakh rupees. Let's say he has no other income. His GTI is 7 lakh. Let's say this person is not claiming any chapter 60 deduction also. So his total income is 7 lakh. First of all, calculate tax on this 7 lakh as per optional scheme. We understand first 2.5 lakh nil, next 2.5 lakh at a rate of 5%, it will be 12,500, and next 2 lakh, it would be 20%, 40,000. So it tax comes to 52,500, right? Plus cess also you can compute. Let me calculate that cess also. 52,500 plus 4% cess. Total comes to his tax liability is coming as 54,600, right? First of all, tell me, although in section 193, in this particular section, we can avail section 197A relaxation is available. First of all, tell me whether Mr. Y can take the relaxation of 197A. The answer is no. Why? Because the income which this person is receiving, even both the conditions are not getting satisfied. Why? Because the income which this person is receiving is more than basic exemption limit. First condition is not satisfied, so this person cannot take 197A. And second condition is also not getting satisfied. Why? Because his tax liability is coming some amount 54,600. Even that is also not nil, so he cannot claim. Although 193 says that if you are eligible for 197A, then you can take it. But this person is not eligible for 197A, so this person cannot take 197A now. So what he will do? Let's say he's doing nothing. He's doing nothing in this case. His tax liability is 54,700. He will say that my TDS is deducted 70,000. Whatever is the remaining amount, how much it would be? 15,400 something. This person will get tax refund, right? This person can get 15,400. This person can get tax refund. But let's say this person doesn't want this way. This person says that Tata Motors, please deduct my TDS only for 54,600, please, because I have no other income. Please deduct my TDS of 54,600 only. Please do not deduct 70,000 rupees. That is, they want to get the TDS deducted, but at a lower rate. They want to get the tax deducted, but at a lower rate. So in that case, Tata Motors will say, in that case, please bring a permission from the assessing officer. Go and bring the permission from the assessing officer, because here the amount which we are paying is more than basic exemption limit. Your tax liability is also something, so we cannot give you 197A relaxation. If you even file 15G to us, we are not going to help in that case, because 15G condition is not getting satisfied. So Tata Motors will say, okay, we are ready that we will deduct 54,600 tax which you are saying at a lower rate, but please take the permission from the assessing officer. So in that case, Mr. Y will approach first to the assessing officer. He will take the permission from the assessing officer. And if assessing officer is satisfied, AO will grant him the permission. So if this permission, he will show it to Tata Motors, and then Tata Motors will deduct TDS, but at a lower rate. That is called section 197. This is 197. Why I was saying 197 is a stronger section? Because 197 is more powerful, right? Because here you have received the permission from the assessing officer. So now Tata Motors people will not be able to go against it, right? Because this is something which is more powerful. They cannot deny now, right? Because you have received the permission also from the assessing officer. So these two sections are both of relaxation. 197A, if both the conditions are satisfied. For senior citizens, we don't have first condition. We have only the condition that tax liability should be nil. But 197 is where there can be your tax liability. There can be tax liability 0 also. But in any ways, if 197A is either it is not available or the conditions are not satisfied, then we can take the help of section 197 also. So you should know about these two sections also. So in these three sections, 193, 194 and 194A, the benefits of 197A and 197 is both as allowed. If you are eligible, you can take this benefit. Got it? Let's read this section now. Come to page number 11.4. Section 193, interest on securities. It says that who is the TDS deductor. So you understand the person who is paying us the amount, that would be the TDS deductor. So in this case, because this is interest on securities, so the person who has issued such securities, generally these are companies, because companies has issued debentures. So they are paying interest on debentures. So Infosys, Wipro, these are TDS deductor. Bonds also, whoever is the issuer of bonds. So generally some bonds are issued by government also. So if government has issued the bonds, they are giving us interest, they could be the TDS deductor, right? And who would be the TDS deductee? We understand it would be a resident investor, any resident person. If this deductee is a non-resident, then section 193 will not apply in that case. There is some other section that we will do in CFI level, right? Rate of TDS is 10%. Here, what do you mean by securities? This is simple. Debentures are securities. Central government, state government bonds, and other securities are securities, except shares. Because shares are also securities, but on shares we don't earn interest. On shares we earn dividend. That is the reason shares are not written over here. Shares we will see in next section, section 194. Rate of TDS, you understand, it is at a rate of 10%. At what time they should deduct? Whenever they are paying to us, they should deduct at that time generally, but in some cases it is at the time of credit also, whichever is earlier. What does this term means at the time of credit? Let's say uh, Wipro Wipro Limited is giving us debenture interest. They are giving us debenture interest. So let's say on 31st of March, on 31st of March 2024, they have passed a general entry in their books of accounts. They have passed an entry. They have passed that they are now giving us debentures interest. So they have passed an entry, debenture interest debit to debenture holders account, right? So what they have done, they have credited our account, right? Debenture holders account. So this entry was passed on 31st of March, but they are paying us dividend, let's say on they are paying us dividend on 15th of April. After 15 days, 15th of April 2024, they are paying us the dividend. So this is the date of payment and this is the date of credit. So at what time they should deduct the TDS? So in this section it is written at the time of payment or at the time of credit, whichever is earlier. At the time of payment or credit, whichever is earlier. So on 31st March 2024, they should deduct this TDS amount, right? The liability to deduct the TDS will arise on this particular date. So generally in most of the section, although this is not very important from examination point of view, but it is there in our syllabus. In most of the section, you will see that it is written at the time of payment or at the time of credit, whichever is earlier. But there are also few sections where it is just written at the time of payment only. Like in salary, we have at the time of payment. Those sections of 194B, double B and all, where you receive casual income, there it is mentioned that at the time of payment. But generally, you will find it is at the time of payment or at the time of credit, whichever is earlier. So it is also written over here that whether they are crediting our account by our own name or by any name, if they are crediting, let's say they are crediting it by through suspense account, then also they have to deduct the TDS. So as and when they will book this expense in their books of accounts, they have to deduct the TDS. This is in section 193 also, 194 also, and 194A also, right? Okay. So at the time of deduction, you understand. Lower rate of TDS I've already explained. So 197 is also applicable. 197A is also applicable. Not that important from examination point of view, but yes, you should remember that it is 10% TDS in this case. And you understand for 197A, if the person is not a senior citizen, then they have to give form 15G. And if they're senior citizen, they have to give form 15H that I have already discussed in detail, right? Okay. This is a bit important. No TDS under section 193 on these securities. So it has given us certain exceptions, although we are earning interest on securities, but in these cases, there will be no TDS. In these cases, there will be no TDS. So this is a bit important. If we have national development bonds, generally these are government securities. So if we have national development bonds and if government is giving us interest on such type of bonds, then they will not be deducting TDS. Not that important. Second point is 7-year national savings certificates. You understand these are NSCs, national savings certificates. You can invest amount for a long period of time. You can visit to the post office. You can ask them that I would like to I would like to make some investment in NSCs, national savings certificates. So you receive interest on NSCs. That is a taxable amount, but whenever you will receive this interest on NSC, TDS will not be deducted. So NSCs on NSCs, TDS will not be deducted. These debentures and bonds which are notified by central government, Power Finance Corporations, Corporation Limited bonds, or Indian Railway Finance Corporation bonds, which are notified under Section 54 EC. First of all, do you remember Section 54 EC? Yes, sir, a bit we remember that we have covered in the chapter of capital gain. We have covered in capital gain that if there is a long-term capital gain, if the assessee has sold their land or building or both, and if there is a long-term capital gain, they can invest in maximum it is 50 lakh, right? 50 lakh they have to invest within 6 months. That is Section 54 EC. So there we have read there were some bonds like NHAI bonds or RECL bonds were there, right? And other notified bonds. So these bonds are also notified in Section 54 EC, right? So you can invest in these bonds also. So anyways, if you have invested in these bonds, you will receive interest, right? But on this interest, TDS will not be deducted. On these bonds, if you receive interest on such bonds, TDS will not be deducted. Any security of central government, state government. Central government, state government is also saying that please invest in our securities, and what incentive they are giving to us, that TDS will not apply on our securities. So if you invest in central government, state government securities, TDS will not be deducted. But yes, there are certain exception also. There are few bonds and few securities. If you invest in those securities, TDS will apply in that case. What are those? Exception is 8% and 7.5% saving taxable bonds. So if you are investing, you just have to read this once or twice, this particular type of bond. So this is saving taxable bond. So by name, it is you can use this name as a reference. It is taxable bonds. So please relate with that TDS will be deducted on such bonds. So if it is 8% or 7.5% saving taxable bonds, then interest will be TDS will be deducted provided you receive interest which is more than 10,000 rupees. Okay. Fifth is any public limited company debenture. If you invest in any public limited company debenture, and if the following conditions are satisfied, interest payable to resident, individual, or HUF. If the investor is individual or HUF plus resident, and the aggregate of interest does not exceed 5,000 rupees, and you receive it through a banking mode, that is through account paycheck or any banking mode, then TDS will not be deducted. I'm again repeating. So if you have invested in any listed company debentures, and if the amount of debenture interest is not more than 5,000 rupees, and you are a resident individual or HUF, if the investor is, let's say, partnership firm, or if the investor is a company, then TDS will apply. But if the investor, right, the TDS deductee, the one who is earning income, right, that person is getting debenture interest which is not more than 5,000, and that through banking channel, then TDS will not be deducted. Last is securities issued to LIC, GIC, or any other subsidiaries of GICs. LIC is Life Insurance Corporation, GIC is General Insurance Corporations, and we have some subsidiaries of General Insurance Corporation. We have some companies like National Insurance. We have some companies like Oriental Insurance. These are, you don't have to learn these, but these are subsidiaries of general insurance companies. So if LIC will purchase, these are securities issued to, securities issued by, or securities issued to, securities issued to LIC. So let's say I take this example. Let's say Wipro is the company, they have issued debentures, and to whom they have issued? To LIC. LIC is the investor, or GIC, general insurance companies, or their subsidiaries like Oriental Insurance, New India Insurance, National Insurance are some subsidiaries. You don't have to learn this, but now they are earning income. They are earning income. So if Wipro Limited or any of the company will be giving debenture interest or the securities which are issued to, these are the investors. So if they are the one who are earning income, so if you are giving interest to LIC, GIC, or any of their said subsidiaries, TDS will not be deducted, right? So this was section 193. I would now jump to our question bank. So we have, if I hope that you have your question bank ready with you. You can easily download from the website as well. So there is a question. If you'll download your question bank from website, you can, even if you have not downloaded it, you can pause the video and you can download it. After once you download, there is a page 11.1, this chapter TDS. Come to this particular chapter. Okay, got it. We have question number two, second part. Come to question number two, second part. This is regarding section 193. It says examine TDS TCS implication in case of following transactions. Briefly explaining the provisions involved, assuming that all the pays are resident. All the pays are pay. Who is the pay? The one who is receiving. It is written pay, not the payer. The pay is resident. Okay. State the rate of an amount of TDS in case TDS TCS is required to be deducted or collected. So we have to examine. First of all, we have to examine whether TDS will apply. I'll not do TCS right now. TCS will do in next lecture. But regarding TDS, we'll discuss. So first of all, you have to examine, you have to determine whether TDS implications would be there or not. Second, if it is not there, then you can simply write that TDS will not apply. But if TDS implications would be there, then you have to tell to the examiner that how much TDS will be deducted, right? So everything is written over here, that state the rate also and the amount to be deducted in case it is required to be deducted. Second point. So it is question number 2, page number 11.1, second part. Mr. Marwa, age 80 years, super senior citizen, okay, holds 8% saving taxable bonds of rupees 2 lakh and 7.75% saving taxable bonds of rupees 3 lakh. He received yearly interest on these bonds on 28th to 2024. So Mr. Marwa is receiving interest on which type of bonds? On saving taxable bonds. So we have just discussed that generally the securities which are issued by government, they don't deduct TDS, but on such kinds of bonds which are savings taxable bonds, TDS will be deducted. So he is receiving yearly interest on these bonds on 28 to 2024. So for the entire year, he is receiving the interest. So how much TDS will be there? First of all, yes, TDS will be there because we understand. So you will say section 193 will apply over here. Even if you don't remember the section number, it's fine. But you should know the rate. The rate of TDS would be 10%. And how much is the interest? On 2 lakh, this person is receiving 8%. See, calculation is already there. Let's save some time. So I'm reading it from here, right? I'm doing a bit cheating over here. So I'm saving my time. So 2 lakh into 8%, that is 16,000. And 3 lakh into 7.75%. Where this 8% and 7.75% come? It was already written that these bonds are 8% saving bonds and 7.75% saving bond. That is the rate of interest. So 2 lakh into 8% is 16,000. 3 lakh into 7.75% is 23,250. You can total this amount. That is how much it is? 39,250. It is written over here. So 39,250. TDS will be deducted. How much? 10% is the rate of TDS. 3925 will be deducted, right? So this is the amount which will be deducted in this case. Okay, you can ask me a question, sir. Can he give, because this is person is a senior citizen and the amount of interest is also which is he receiving is not that much. Can he give form 15H and can claim section 197A relaxation? The answer is yes, they can. But here it was not mentioned in that way, right? It was not mentioned that whether he would like to get the relaxation or not. So simply we will say that TDS will apply, right? Practically, if this person would have been our client, we would have given him a suggestion that if you are not getting that much income, you can take the relaxation of 197A or 197 as the case may be. But right now, the question is just asking to us that whether the TDS would be apply in such scenario or not. We will say yes, it will apply, right? Don't unnecessarily give unnecessary information to the examiner, right? Because unnecessary, if you will give information, that person examiner can deduct marks. So whatever it has been asked in the examination, give that explanation point to point, right? No need to give any extra information. If the question would have asked you such things that whether he has any option so that TDS should not be deducted, then we can give that particular information, right? Okay. Next, come to section 194, TDS on dividend. Okay, I have written everything that which question I have to match with which particular section. Okay, section 194, TDS on dividend. You understand dividend will be issued by the companies who have issued the shares. So any Indian company who has issued the share, they will deduct TDS. So if you ask me, the foreign company will also deduct TDS? No. For why foreign company? Because Indian income tax will apply to Indian company. So if it is a foreign company situated outside, why they will deduct TDS? So it is only Indian company if they are paying dividend, so then they will deduct TDS. Who is responsible? Who is the principal officer? Who is the CEO of the company? They is responsible to deduct TDS. So there are, although there are arrangements made, there are departments made, there would be their accounts department, they will handle it. But yes, ultimately it is the principal officer responsibility that TDS should be deducted. Who is the deductee? Resident shareholder. Rate of TDS 10% at the time of payment of or the time of distribution. Why this distribution is written over here? Because we understand there is a concept of deemed dividend also. We have done this in the chapter of IFOS from section 222 A, B, C, D, etc. So if the actual dividend is not distributed but deemed dividend is distributed, then also you have to deduct TDS. Rate of TDS, you should remember, 10%, right? And in case of individual shareholder, if the amount of payment is not more than 5,000, then it is not required to deduct TDS. But if the amount is more than 5,000 in a year, then you should deduct TDS. Let's say if you are paying to a shareholder rupees 6,000 rupees. So should you deduct TDS on 1,000, on 5,000 TDS will not be deducted? No. Then on entire 6,000 TDS will be deducted. On entire 6,000, the rate of TDS would be 10%, 600 rupees would be deducted. And section 197 and 197A both are applicable. What are these sections? These are relaxation, right? So this is TDS on dividend, section 194. There is a similar section 194K also, which is related to when you receive dividend on mutual funds. Generally, we don't call it dividend, but we call it income on mutual fund unit. So if the person, actually why I'm referring to that particular section, because all these things are same over there also. So if you come to page 194, the section is 194K. It must be somewhere. Yes, it is on page number 11.14, guys. Section 194K. TDS on mutual fund units. So similarly, because when you invest in shares, you get dividend. So when you invest in mutual fund units, you get income. Some people also call it dividend, but generally it is called income. So if you are getting income out of those mutual fund units, right, that also same amount of rate will apply, 10% TDS rate, and the threshold limit is 5,000 rupees. But if you are selling your mutual fund, see, in section 194 we have done that you are receiving dividend on shares, right? You have not sold your shares, right? Because if you are selling those shares, then it would be capital gain. On capital gain there would be no TDS in this case, right? So there you are receiving dividend, and here also in mutual funds you are receiving income. So if a person is selling their mutual fund, that would be another scenario. Then 194K will not apply. 194K will only apply when you are receiving income. You have your mutual funds, you are not selling them, right? You have your mutual funds, just you are getting income on those mutual funds. Then 194K will apply. And who would be the deductor? Obviously those mutual fund companies, because these mutual fund companies are giving you income, correct? So they will be deducting TDS. So TDS deductor would be the mutual fund company. TDS deductor is any resident, same. Rate of TDS 10% at the time of payment or at the time of credit, whichever is earlier. Threshold limit is 5,000 in a financial year. If you are not getting more than 5,000, no TDS. But if you are getting more than 5,000, then TDS will apply on the entire amount. I believe that this is clear to you. Lower rate of TDS, yes, both these sections are applicable. 197 or 197A, as the case may be. We have already discussed these sections in length. So you know these sections. So 194K is also finished because it is same like 194. So you can write it over here. This is same as section 194. That is TDS on dividend. You can write it over here. Right? Okay, come back. So third section was, in fact, we have done the third section as 194K, but yes, the next section is 194A. TDS on interest other than securities. So if you are getting interest which is other than securities, for example, if you have deposited some money in the bank account, so in the saving bank account you have deposited the money and the bank is paying you saving bank account interest, or on FD or on any type of deposit like RD and etc. Even As I have already told you that if you are a person, you have given a loan to someone, let's say you have given a loan to a partnership firm and they are giving you interest, then also they can deduct TDS, right? One more thing which you should understand. Okay. So let's say this person is Mr. Suresh. He's quite a rich person. He has lots of money and he keeps on lending the money also. So he has deposited some money in the bank, right? And let's say this bank is giving him interest. And this bank is going to deduct TDS under section 194A, right? So whenever this bank will be giving the interest to Suresh at the time of payment or at the time of credit, they will be deducting TDS. 194A will apply over here, right? Mr. Suresh has also given the loan to a partnership firm. The same type of example I can refer, that these there were some two or three partners, and Suresh is their friend, and they came to Suresh that Suresh, we need loan, and Suresh will say, okay, I'm giving you loan, but I need interest. This partnership firm says, okay, we'll give you interest also. So whenever this partnership firm is giving the money to Suresh, this is interest on securities or this is interest other than securities? Other than securities. So here also 194A will apply. Bank will also deduct TDS under section 194A. This partnership firm will also deduct interest under section 194A. Let's say Suresh has given money to another individual, Mr. Mahesh. Let's say Mahesh is also running his sole proprietorship business. He was an individual owner of his own business and he needs money, and Suresh and Mahesh are friends. So Mahesh approaches this person and he says that please give me money. Suresh says, okay, I'll give you the money, but I need interest. Okay. So this individual is also giving interest. My question to you is, because this is something which is important because it will come in most of the sections. My question to you is, when Mahesh will be giving interest to Suresh, whether this particular person, Mahesh, will be deducting TDS or not. This person will be deducting TDS or not. The answer is, if this individual, the general thumb rule is, generally if the deductor, the source is individual and HUF, they will not deduct TDS. This is a general thumb rule, right? If the source is, here the source was bank will deduct TDS. Partnership firm, company, AOP, BOI, they will deduct TDS. But if the source is, deductor is individual and HUF, they will generally not deduct TDS. Got it? This is a simple thumb rule. Individual and HUF will not deduct TDS. So I can say that when Mahesh will be paying interest, this person will not be deducting TDS, and they will, if there would be no TDS provision, then they will be paying the entire amount to Suresh. Okay. But in this case, if this individual or HUF also, let me stick to individual right now. So if this individual turnover of the last year, of the last preceding year, right? Preceding year to preceding to the previous year, right? Our previous year is, let's say this person is giving interest in the previous year 23-24. This is our previous year, right? This is our previous year, and we have to see whether this individual turnover in the preceding previous year is previous year 22-23. In this year, this person is paying interest, so we have to see last year turnover. Why last year turnover? Why not this year turnover? So let's say this person, Mahesh, is giving him interest in the month of April 23. That is during this year. So how we will be able to know the turnover of this year, right? Because this year is not yet completed. This year is going on as of now. So we don't know the turnover of this year. So in this case, we always have to see the turnover of the last year, preceding year. So if the preceding year turnover was more than 1 crore, or if this person is running his business, then 1 crore. In case of profession, it is 50 lakh. So if the turnover of the preceding year of such individual, and the same applies to HUF also. So if the turnover of individual or HUF in the preceding previous year is more than rupees 1 crore in case of business, rupees 50 lakh in case of profession, then they are also liable to deduct TDS. Then also they are liable to deduct TDS. So let's say Mahesh turnover in the last year. Let's say last year turnover was just 99 lakh and this person is doing his business. So in this case, Mahesh will not deduct TDS. Whatever is the interest, he will pay the entire amount. But let's say last year turnover was more than 1 crore. It was, let's say, 101 lakh, 1.01 crores, right? It is more than 1 crore. In that case, Mahesh would be liable to deduct the TDS. So generally, to summarize all these things, generally individual and HUF will not deduct TDS, but it depends if their turnover of the last year was more than 1 crores in case of business. In case of profession, it is 50 lakh, then they will be required to deduct the TDS also. Please understand this provision, because this provision will be repeated in many of the sections. This provision will be repeated in many of the sections, right? Okay. So TDS deductee could be any resident, but TDS deductor, if the deductee, this particular person who has given the money, this person should be resident. If this person is a non-resident, then we have some other section which is not in our syllabus, because all these three sections, in fact now all these four sections, 194K also, here the person who is receiving the money should be resident. If that person is a non-resident, then we will not apply these sections, right? Okay. But who is the deductor? Deductor can be any person. Deductor can be any person. Deductor can be bank. Deductor can be partnership firm. Deductor can be AOP, BOI. Also, can they be individual or HUF? Yes, if their turnover of the preceding financial year was more than 1 crore 50 lakh, as the case may be. So individual and HUF can also be deductor only when the last year turnover exceeds 1 crore or 50 lakh in case of profession, right? Got it? Rate of TDS is same, 10% in all these four sections. Time of deduction at the time of payment and credit, whichever is earlier, you understand now. Threshold limit, very important. This section is very important. Please mark it important. Among all these four sections, this is the one, although all are important, but this is the one which is more important, right? So the threshold limit is, so if this person is getting interest from any bank, post office or cooperative bank. So if this person is getting interest from bank, post office, cooperative bank, the threshold limit is 40,000 rupees. So if this bank is paying not more than 40,000, they are not going to deduct TDS. But if they are paying more than 40,000, they will be deducting TDS on the entire amount, right? So if they are paying 41,000, then 41,000, 10%, that is 4,100 TDS will be deducted on the entire amount, right? So bank, if the bank is paying interest, if the cooperative bank is paying interest, or I'm not using the word cooperative society, I'm using the word cooperative bank, right? Or the post office giving them interest, then the limit is 40,000. And if this Suresh is a resident senior citizen, the limit will be increased to 50,000. So the threshold limit will be 50,000, right? So 40,000 or 50,000 will apply in case of bank, post office or cooperative society. Now examiner can ask you that Suresh is receiving interest from two banks. Let's say one is SBI, State Bank of India, and second is Canara Bank. So this person is receiving interest from two banks. This person is not senior citizen, and SBI is giving him 30,000 rupees interest. Canara Bank is giving him 30,000 rupees of interest. The total, this person is receiving 60,000. Will TDS will apply in this case? No. Why? Because SBI cannot determine how much other bank is paying, right? We don't have accounts of other bank, right? So SBI can only see their account, that how much we are paying to Suresh. So it might happen that he might have bank accounts in two of the branches of SBI. Then in that case, we can club, because we know that now there is a centralized banking system. So if let's say 30,000 is being given by one SBI branch, 30,000 is being given by other SBI branch, then SBI is a one person. They have their centralized banking system, and now they will be able to determine that we are paying more than 40,000, 50,000, as the case may be. In that case, you can club. But here the banks are separate. Here you cannot club, right? So in this case, the limit is 40,000. But if this person is a senior citizen, then 50,000. If this person is receiving interest from partnership firm or other person, then the limit is 5,000, right? So there are three threshold limit over here. If you are receiving amount from bank or these post office or cooperative bank, the limit is 40,000 or 50,000. But for other, if you are receiving interest from other person like partnership firm or individual whose turnover was higher, in that case the limit is 5,000 rupees. So 40,000 if the interest is paid by banking company, cooperative bank and post office. All branches in case of CBS, core banking solutions, I have already discussed with you. The limit will be 50,000 in case the interest is paid to resident senior citizen. So if the person who is receiving the interest who is a resident senior citizen, then the limit would be 50,000. And I have already discussed in other cases, the limit is 5,000. So this limit is a bit important. Both the relaxation section 197 and 197A are applicable. This is also important. Please mark this important. No TDS under section 194A in the following cases. Interest by a firm to its partner. You understand, you have done partnership accounts also in your initial levels. I think it's not there in intermediate. Is it there in intermediate now, partnership? No, it's not. Okay. But you have done partnership account in your initial levels. So partner also receive interest. Partners also receive interest from their firm. TDS will not apply in that case. So you have said, sir, you have given the example of partnership firm. Boss, here partnership firm was giving interest to outsider. They were not giving interest to partner, right? So if this partnership firm will give any interest to their partner, then 194A will not apply. Very important point. Very important point. So here partnership firm was giving interest to any outsider who was not his partner, right? But if they will be giving to their partner, 194A will not apply. Very important point. Very important. Deposits notified by central government. So there are certain deposits which central government can notify that TDS will not be deducted. Not that important. Interest paid by cooperative society. This here it is not cooperative bank here, because you understand what is cooperative societies. Cooperative societies could be different types of cooperative societies can be. The one who are engaged in banking business, those are called cooperative banks. But those who are not engaged in banking business, they are just cooperative societies. So cooperative society, if it is a big cooperative society, then they can deduct TDS. But if it's a small cooperative society, they will not deduct TDS. What is the parameter of big cooperative society or small cooperative society? It's the turnover, right? So interest paid by cooperative society to its member, TDS will not be deducted. So you understand that there are members in cooperative society. So the conditions are turnover of such cooperative society does not exceed 5 crore. So if it is a small cooperative society, then it will not deduct TDS. So if the turnover exceeds rupees 5 crore of the preceding year, then they will deduct TDS if they are paying interest to their members. But if they are small cooperative society, then they will not deduct TDS. And the amount of interest is not more than 40,000 or 50,000. The limit is same over there, 40,000, 50,000, right? Next point is interest paid under Income Tax Act. Interest paid under Income Tax Act. What is this? See, if you have paid, that is I was discussing in the initial part of this lecture. Let's say if you have paid extra amount of taxes, let's say you have your TDS was deducted extra, your TCS was collected extra, you have paid advance tax extra, then income tax will give you refund. And if this refund get delayed, they will also pay you interest also, right? So here you are also getting interest, right? And that interest which you get, that is your IFOS income, you understand. Income tax refund is not income, but the interest earned on such refund is your income, right? So when income tax department will be paying you interest, they will not be deducting TDS under section 194. So if you receive interest under Income Tax Act, TDS will not be deducted. Interest paid to bank, cooperative bank, financial institution, LIC or insurance company. If these people are investor, let's say SBI is paying interest to whom? PNB. If SBI is paying interest to PNB, SBI is paying interest to LIC or any other insurance company, then section 194A will not apply. It is relaxed over here. So if one bank is paying interest to another bank, or let's say anyone who is paying to these people, if we are paying, let's say I have taken a loan, let's say I have taken a loan from ICICI Bank, right? So I'm paying interest. Let's say my turnover of the last year was more than 1 crore 50 lakh, as the case may be, and I am paying interest because I have taken the loan. Then therefore I am paying interest to ICICI Bank. Should I deduct TDS? The answer is no, because it is written that interest, if If you pay interest to any bank, to any cooperative society, financial institution, LIC, insurance company, then TDS will not be deducted, right? And there is also one more thing which is inserted by this Finance Act recently. No TDS on Mahila Samman Savings Certificates 2023. So these are securities which are come up, especially Mr. Prime Minister has just released such type of securities in 2023. This is for females, Mahila Samman Savings Certificates. So if you invest in such type of certificates and if you receive interest, then also TDS will not be deducted. So please remember this particular name, Mahila Samman Savings Certificates. Mahila, you understand? Mahila is the ladies, female members. Samman is the reputation. So a Mahila Samman Savings Certificate is, if it is issued, then TDS will not be deducted, right? Samman is respect, so not reputation, it's respect, right? So we should respect females. Okay, so let's discuss some examples. If you come to page number 1, if you, this is same question bank, page number 11.1, question number 2, first part. Question number 2, first part. On 1/5/2023, Mr. Brajesh made 3 fixed deposit of 9 months each of rupees 3 lakh each. Okay. On 1/5/2023, 1st May 2023, not from the beginning, it is starting from 1st May. Mr. Brajesh made 3 fixed deposit of 9 months each of 3 lakh each, carrying interest of 9% with Mumbai branch, Delhi branch, and Chandigarh branch of CBZ Bank. So branches are different, but the bank is same, right? TDS will be deducted. So we have to aggregate first. A bank which has adopted CBS, these fixed deposits mature on 31/1/2024. Okay. Tell me for how many months they were? They were for 9 months. If you calculate from the month of May till 31st of January, so it comes 9. So how much is the deposit? 3 lakh each. Okay. 3 lakh. And what is the rate of interest? 9% for 9 months. And we have 3 types of deposits. 3 deposits each. So I'm just multiplying it by 3. Right? Otherwise, you can do it. This is first deposit, then the same you have to write for second deposit, third deposit. So I have just multiplied it by 3. So how much would be the interest? 3 lakh into 9% into 3. 9 months is 9 months divided by 12. So this is 60,000. 60,750. So this person is receiving 60,750. So the bank is giving him interest, Mr. Brajesh, and the threshold limit is more than 40,000. So TDS will be deducted. This is 60,000. Let me recalculate it once again. 9 divided by 12 into 9% into 3 lakh into 3. Yes, it is 60,750, more than the threshold limit of 40,000. So 10% TDS will apply. How much? 6075 TDS will be deducted in this case. So if you will see, 60,750 into 10%. This is 6075. It's not 1. It's not 1 over here. You can do it this way. 6075 amount will be deducted. Right? Okay. Come to question number 2, third part. Messrs. AG Private Limited took a loan of 50 lakh from Mr. Haridas. He took a loan from Haridas. So this company has taken a loan from Haridas. Company is paying interest. 194A can apply, right? So if they have issued securities, then 193 will apply. If it is other than securities, 194A will apply. It credited interest of 79,000 payable to Haridas during the previous year, 1920. Turnover of this is not 1920. Make it 2020 to 23, right? So they have given us actually this was in January 2021. That is why they have given that date. So I should take it 20 to 23. So they are giving 79,000 rupees interest and turnover of was 60 lakh and 46 lakh during the previous year 22 23 and 23 24. So here we don't have to look at the turnover also, because why? Because who is giving the interest? Mrs. AG Private Limited, they are giving interest. They have taken a loan. They have taken the loan from Haridas. So they are paying 50, they are paying interest on 50 lakh. How much they are paying? 79,000. So they will deduct TDS under section 194A at a rate of 10%, right? So 7,900 TDS will be deducted in this case. So here Mrs. AG Private Limited has to deduct TDS at the rate of 10% under section 194A, and which is more than 5,000, because we understand if we get TDS from bank or post office or cooperative bank, then 40,000, 50,000 limit is there. But from others, we have 5,000 turnover limit. So here we are getting more than 5,000, that is 79,000. So 10% TDS will apply. That would be 7,900. Correct? Okay. Come to question number 3, second part. Examine and explain the TDS implications, assuming that the deductee are residents and having PAN number. Okay. Come to question number 3, second part. Indian Bank sanction and disperse a loan of 12 crore to B Limited. On 31/12/2023, B Limited paid a sum of 1,20,000 as service fees to Indian Bank for processing the loan application. Okay, what is happening over here? Indian Bank has sanctioned a loan. Indian Bank is the name of the bank. Indian Bank has sanctioned and disbursed a loan of 12 crore to B Limited. Now B Limited is paying service fees of 1,20,000. So B Limited is paying 1,20,000 rupees to whom? To Indian Bank. If we are paying to Indian Bank, then we cannot deduct TDS. We cannot deduct TDS. It is a kind of interest also, because this B Limited has taken a loan. B Limited has taken a loan and they are paying service fees. It's in the nature of interest. So in that case also, but TDS provisions will not apply. Why? Because we are paying to any bank. So we understand that if we are paying to any bank, to any post office or to any cooperative bank, or we are paying it to LIC or any other insurance company, then TDS will not apply in that case. So here TDS will not apply. Got it? So on payment of service fees, even though service fees is included in the definition of interest, no tax will be deductible. Why? Because this is paid to a banking company, that is Indian Bank. Therefore, TDS will not apply in this also. Right. Now come to question number 7. First part. This is 11.5. Briefly discuss the provision of tax deducted at source under the Income Tax Act in respect to the following payments. First is Kamlesh, a resident individual aged 65 years, has maintained 2 fixed deposits in 2 different branches of ABC Limited, ABC Bank of India, working on core banking system. See, we have 2 fixed deposits in 2 different branches, but the bank is same, so we can club it together. But if the bank would have been different bank, then we cannot club it together, right? During the year 23-24, the bank paid 32,000 interest and 17,000 is interest on these fixed deposits. So you have to club both of them because they are coming from the same bank. Although it is different branches, but they are coming from the same bank. 32,000 plus 17,000, which is how much? 32 plus 17, 49,000. And which is more than 40,000 limit. You will apply 40,000 limit over here or 50,000? 40. Mr. Kamlesh is a resident individual and age 65 years. This person is a senior citizen. So in this case, you will apply 50,000 limit. So the amount of interest which I am getting, which this person is getting, which is not more than 50,000 rupees. So in this case, TDS provisions will not apply. Why? Because it is not more than the threshold limit. If it would have been exactly 50,000, then also TDS will not apply. If it is more than 50,000 in this case, because the receiver is a resident senior citizen. So in this case, TDS will not apply. Why? Because this 50,000 limit is not getting crossed. So ABC Bank is not required to deduct TDS under section 194A, since the aggregate amount of the 2 branches, we will aggregate. Why? Because it is one bank. We will aggregate, but the total amount is not more than 50,000 rupees. The total amount is just 49,000. So in this case, TDS will not apply. Why? The threshold limit is not getting crossed, right? So these were certain sections of, we have done 4 sections so far. We did 190. First, we have made our base strong of TDS. We know all these terms. We know what are the responsibilities of TDS deductor. And we know what are the relaxation sections. 197, 197A we are aware of, and we have already completed 4 sections as of now. 193, 194, 194A and 194K. What is 194K? This is income from units of mutual fund. 194 is A is interest other than securities. 194 is interest on, sorry, dividend on shares. 193 is interest on securities, right? Let's come to other section now. Okay, now we have this is a family of 3 sections where the TDS rate is 30%. We have section 194B. When it will be applied, if you when any income from lottery, crossword puzzle, game shows, betting, gambling, I can say casual income. So if I receive any income that is in the nature of lottery, game show, quiz, etc., so TDS rate will be 30%. We have similar sections. 194B is there. 194 double B is there. This is winning from horse races. So if I go to any race course, and if I win any amount on any horse, I just do some betting and that horse wins. In that case, I'll get the amount, and 30% TDS rate will apply in that case. This is 194 double B. A new section has been inserted this time, and it is important from examination point of view also. This time in your 2024 examinations, it can come 194 BA. So initially it was just 194B and 194 double B. Now in between there is a new section which has been inserted. I'll tell you over here. See, we have 3 sections. Initially it was 194B and 194 double B, but now by this Finance Act, new section 194 BA is also inserted, that is on online gaming. So these sections are about 194B. First talk about 194B. It is about that if you win any amount in your, it could be lottery, game show, quiz, etc. So it could be lottery income, game show income, quiz, betting, gambling, etc. Right? 194 double B is related to if you win in any hit or horse race. So this is specifically for horse race. Initially there were 2 sections. But now there is one more section now. This is 194B, which is just introduced. This is related to online gaming. And guys, I tell you that these all 3 sections are quite similar. They are quite similar. Most of the provisions are same in all these 3 sections. First of all, the TDS rate. If you ask me about these 3 sections, what is the TDS rate? Same TDS rate in all these 3 sections. TDS rate is 30%. Second similarity is that the section which we just did, 193, 194, 194A, 194K, those sections where the payee, in those sections, the payee was resident. The person who is receiving that amount was resident. But in this case, if you win lottery income, the person who is winning this lottery income, the person who is earning the income, that person could be resident also, and that could be non-resident also. So here, these sections will apply whether the person who is receiving the amount, let's say you go to KBC, Kaun Banega Crorepati, you go to KBC, and whether you are a resident or you are a non-resident, they are going to deduct TDS under section 194B. If you win any horse race, whether this person, the person who is winning this amount is a resident or a non-resident, then TDS will apply under section 194 double B. Online gaming, 194 BA will apply. So second similarity is that whether the person who is receiving this amount, it could be that person could be resident also, non-resident also. The rate would be 30%. But yes, although it will not come in examination, but yes, whenever we will be deducting TDS for non-resident, then we will consider cess also, right? Because I've already told this. Generally, while deducting TDS, we don't consider cess, but there are certain exceptions. One exception was salary that I'll discuss with you. Second is whenever you are deducting TDS for non-residents, then also you have to deduct TDS and plus cess also. So let's say if there is a lottery or a game show, if someone wins this amount and that person is resident, then we will deduct only 30% TDS. But if this person is a non-resident, then we will deduct 30% TDS plus cess also. We will include 30% plus 4% cess also over that. Is it 34%? No, it is 30% tax, and on that amount you have to apply 4%, right? That is easy. But in examination, examiner will not ask you about non-resident. Okay. Other similarity is that generally whenever they are paid, then TDS will be deducted. So here earlier it was whenever it was paid or at the time of credit, TDS will be deducted. But generally in this section and in this section, whenever this amount will be paid, TDS will be deducted. This section has some special characteristics. It has some special provisions. I'll tell you. Here the threshold limit is 10,000 rupees. Here the threshold limit is 10,000 rupees. Here also the threshold limit is 10,000 rupees. Here the threshold limit is something different, right? But in this section 194B and 194BB, the threshold limit is 10,000 rupees. You can ask me why we have two different sections if everything is similar. Everything is same in these two sections. There's no difference. So you can ask me why we have two sections, because previously, initially, there was, when this section was introduced, in this section it was threshold limit was 10,000, but in this section the threshold limit was 5,000. But later on it was increased to 10,000. But they can merge these two sections also, but as of now these two sections are not merged. All the provisions are same. So 194B, if you win lottery up to 10,000, no TDS, but if it is more than 10,000, let's say 11,000 rupees, then on an entire 11,000, TDS will be deducted at a rate of 30%, right? Okay. Let's say if someone wins a car in a lottery, this person wins a car. That is, he does not win in money form, but he wins in a kind. So let's say he wins a washing machine, he wins a mobile phone, this person wins a car. So in that case, how TDS will be deducted? So it will be quite difficult for the organizer, the person who has organized this lottery, game show, etc. It is difficult for him to deduct TDS, right? So in that case, if we are giving car, we cannot say that we will keep just 2 or 3 tires as TDS and you can take the remaining car. No, in that case, we will make sure the organizer, the person who is the deductor, he will tell that particular person, the receiver, he will ask him that please go and deposit your tax yourself and give me evidence that you have deposited the tax. So in that case, let's say if you win let's say I'm an organizer of a lottery or a game show, and the first prize was a car. It was a car. The first prize was car. Let's say the car value is 20 lakh rupees, right? So I'll be giving you the car. But in that case, how I'll be deducting TDS? So I will ask you, please, first of all, go and deposit your tax amount. 30% go and deposit, and please give me a proof that you have deposited. So when you will be depositing it, you can do it online. So once you will be depositing the amount in your bank, you will get an acknowledgement that we call a challan. So you will show me a challan that yes, sir, I have already deposited. If the value of the car is 20 lakh, then 30% is 6 lakh rupees. So you will come to me that, sir, I have deposited this tax of 6 lakh rupees. Now you can release the car. In that case, so first in that case, I will make sure that the tax has already been deposited. Then only I'll release that price to you, right? Let's discuss these two sections first, and then I'll discuss 194BA with you. See, 194B is winning from lottery, crossword puzzle, game show, betting, etc. TDS deductor, person responsible for paying income by way of such winning. The person who is responsible for paying the income. The person who is organizing, who is the organizer of that game show, quiz, lottery, etc. Deducting could be any person. The person who is receiving this amount, that person could be resident also. This person could be a non-resident also. In both the cases, this section will apply. Rate of TDS 30%. Can lower rate be applied? The answer is no. Lower rate cannot be applied. Only this is a fixed rate. TDS 30% will be deducted. When this it will be deducted? At the time of payment. At the time of payment or at the time of credit, whichever is clear? No. Only at the time of payment. Not that important for examination point of view, but still try to remember this thing also. But yes, this is important. What is the threshold limit? 10,000 rupees. So if we are giving not more than 10,000 during the year, then there will be no TDS. But if it is more than 10,000, then TDS will be deducted on the entire amount. And this I have already discussed. If the winning is in kind or partly in cash, partly in kind, so we have to make sure that the tax has already been deposited to the government. Then only we will going to release you the price. And this section 194B will not apply in online gaming. Why not on online gaming? Because now we have a new section. So in case of online gaming, like we have so many online games now, hundreds of games we have now. We have Dream 11, we have Jungly, we have so many. I don't know that there are, but I am aware that there are so many online games now. So if you win in those online games, then 194B will not apply. Why 194B will not apply? Because now we have a specific special section 194BA. BA will apply. I'll discuss 194BA in a while. Let me first discuss 194BB with you. This is winning from horse races, and you will find everything is same. TDS deductor, the person who is organizer of that particular horse race, the person who is the owner of that horse race establishment, who is organize this horse race. At the TDS deductee could be any person, resident, non-resident. 30% TDS rate, lower rate is not applicable. At the time of payment, whenever that person would be releasing you the money, they will be deducting 30% TDS. Threshold limit 10,000. Same. 194B and 194BB, everything is same. Just 194BB is only for winning from horse races. If there is any other winning from any other animal race, then it will go in 194B. It is specifically only and only for horse race. Right? And this I've already discussed. If you win in kind, then they will make sure that your tax is first deposited, then only they are going to release that money to you. Okay. So this is 194B and double B. Let me discuss about 194BA also. 194BA is winning from online games. And do you remember I have discussed this thing with you in the IFOS chapter also, right? Because now online gaming, if you win from online gaming, that becomes your IFOS income. So how they will be deducting TDS? Here, they will be deducting TDS whenever you will be taking the money out from your wallet. Let's say, how does this online games work? Let's say there is any online gaming app. For example, I'm taking Dream 11. So there is an app called Dream 11. Let me explain this to you. Let's say there is an app, Dream 11. And there is a person, Mr. A. First of all, he downloads this app on his mobile phone. He downloads this app. Let's say he downloads this app on 1st of May 2023. He downloads this app first time. So this is previous year 23-24. So on 1st of April, first day of April, on opening day, there was no amount in this wallet. He has just downloaded this app anytime during the previous year. So let's say on 1st of May 2023, he downloaded this app, and he, in his wallet, he loaded rupees, let's say 1000 rupees. He loaded 1000 rupees because you have to play amount. This is a sort of gambling. So you have to load your wallet. You have to deposit something in your wallet in this Dream 11 app. So this person has deposited 1 lakh rupees, right? So after some time, he start playing. You should not play it. It is gambling, and there is almost 99.99% possibility that once loses the amount. So please don't indulge in such type of gaming, right? It is just like gambling. But yes, for the taxation purpose, I have to tell you about this. So let's say Mr. A has loaded the amount 1000 rupees in his wallet, and he start playing this amount. And while playing, he loses something, he gains also something. And let's say on 15th of December 2023, he has rupees 20,000 in his wallet. He has not deposited. He was just playing, and while playing, he has accumulated rupees 20,000 rupees. He wins most of the times, let's say, and he accumulated 20,000 rupees. And now his father scolded him, why you are playing this? What is this? You should not play this. Now you please take off, just go and delete this app. Now you are not going to play. Okay. So Mr. A is now deleting this app, but he will withdraw this amount, right? He will withdraw this amount. So in this year itself, he is not continuing with this app. Now he is withdrawing this amount. So tell me, what is the net winning? So what is the net winning? Net winning is that, sir, the amount which he is withdrawing, 20,000 he is withdrawing. How much he has deposited during this year? So only 1,000 he has deposited. So subtract 1,000 rupees. So his net winning is 19,000. So now he is withdrawing the amount from this app. So whenever you will withdraw the amount, as and when you will withdraw the amount, we are going to deduct TDS at a rate of 30% on your net winning. Although there is a threshold limit of rupees 100, but don't do that 100. That is not that important. But whenever you will withdraw the amount, so whatever is the net winning, that becomes your income. So section 194BA, which is a new section, it says whenever you will withdraw the amount, we will be going to tax you, we will be going to apply TDS rate at a rate of 30%, right? If you are a resident, then 30%. If you are a non-resident, then 30% plus cess. But non-resident thing will not come in your examination. Okay. But let's say he does not withdraw. So one thing is that whenever he will withdraw, we will deduct TDS. Let's say this guy, I'm giving you another example. Let's say Mr. A started downloaded this app on 1st of May 2023 and he deposited 1000 rupees. And during the year also, let's say he has deposited 5000 rupees more. This is his deposit, right? And for the entire year till the end of this previous year, he is playing. He's playing. Sometimes he's winning, sometimes he's losing. But at the end of the year, on 31st March 2024, this is the last day of the previous year. Let's say he has not withdrawn anything. But at the end of the year, his wallet balance was 1 lakh rupees. His balance is rupees 1 lakh. Although he's not withdrawing, but at the end of the year, the balance is 1 lakh rupees. So here also 194BA says that we are going to deduct TDS at 2 points. At 2 point of time, we will be deducting TDS. Whenever, if you withdraw the amount, then also we will be going to deduct the TDS. And also at the end of every year, at the end of every previous year, then also we are going to deduct the TDS. In fact, you are not withdrawing this amount, but still, whatever is your net winning is, we are going to deduct the TDS. So here, how much TDS will be deducted? So his closing balance is how much? His closing balance. How you will calculate net winning? Simple. His closing balance is 1 lakh. So whatever he has deposited, you will subtract that. So he has deposited 1000, he has deposited 5000. So 6000 he has deposited. If there is any opening balance, then also we have to deduct. Why? Because then opening balance TDS would have already been deducted last year, right? So we have to subtract from the closing balance. We have to subtract whatever he has deposited, whatever is the opening balance. So here the opening balance was 0 because on 1st of April there was no balance, right? Because he has just started playing in this year. So 1 lakh is the amount. 6000 he has deposited. Opening balance was nothing. So how much is the net winning? 94,000. So we are going to apply 30% TDS on this 94,000. So 194BA says, this is something important. This time it can come in your examination because this is a newly inserted section. So 194BA says that we are going to deduct TDS at 2 points. One, whenever you will withdraw, then we will deduct TDS. And also whenever it is the end of the previous year also, even if you are not withdrawing, then we will be deducting TDS. Okay. Let me extend this example to next year. Let's say next year is previous year 24-25. Just for the purpose of explaining this, let us extend this example to next year also. So tell me, 94,000 is the net winning of this year. TDS has already been deducted. So next year, what is the opening balance? Next year, the opening balance is 1 lakh, right? Let's say next year also he keeps on playing, but he don't deposit any amount. So he has 1 lakh sufficient balance. He was playing with this 1 lakh rupees. And next year, he does not deposit any amount, nor he withdraws any amount. And at the end of the year, the closing balance comes to 1,40,000. So tell me next year how much TDS we are going to deduct? Sir, whatever is the closing balance minus whatever is the amount deposited during this year, whatever is the opening balance we will deduct. This is the net winning. So closing balance is 1,40,000. Deposit during the year was 0. This year we have not deposited anything. And the opening balance was 1 lakh. So 40,000 is the net winning for this year. We are going to deduct TDS at the end of the year on 40,000 rupees. Got it? This is how it works. Let's say if there is any person, although it will not, you will get a very simple illustration or a very simple question on this particular topic, but still, let me explain. If there is withdrawal also, and also at the end of it, there is a closing balance, then what will happen? Let's say Mr. X has downloaded the app very first time on 1st of June 2023. This is previous year 23-24, and this person has downloaded this gaming app for the very first time, and he loaded rupees, let's say 20,000 in this app. He loaded this, he has deposited this money, right? And he started playing. And let's say on 15th of September 2024, sorry, 2023, he has a balance of 45,000 now. How it comes to 45,000? He was just playing and he wins sometime. So that is the reason now the balance is 45,000. So out of this 45,000, now this person is withdrawing. Out of this 45,000, this person is now withdrawing 25,000 rupees. Right now, he is just withdrawing 25,000. He has 45,000, but he is withdrawing 25,000 on 15th of September. Tell me whether there would be any TDS implication. The answer is yes, because we understand we have section 194BA. It's a new section. It says that whenever you will withdraw, we are going to deduct TDS on your net winning. So first of all, tell me how much is the net winning. We will say as of now he's at what time we are deducting TDS at the time of withdrawal. So we will say whatever is the amount withdrawn, minus your deposit. Whatever is the amount withdrawn minus your deposit minus your opening balance. We are going to text this amount. So amount withdrawn is 25,000. Deposit during the year was 20,000 minus 20,000 minus opening balance was 0. On, let's say, on 1st April there was no balance. If there would have been balance, you can write it. Otherwise, if there is no balance, you can write it 0. So the net winning right now comes to 5,000. So we are going to deduct TDS on 5,000. Although I understand that this person has deposited 20,000 rupees. He has deposited 20,000 rupees, and this balance is now 45,000. So he has already won 25,000, right? But right now he is just withdrawing this amount, and we will say that we will be levying your TDS at which amount, whatever is the amount which you are withdrawing right now, 25,000 minus the amount deposited minus the opening balance, right? So we will be deducting TDS on 5,000. So why we are not deducting on other amount? Please wait, because at the closing of the year, everything will be taxed. How? So let's say now, tell me how much is the balance now, sir? Of 40 from 45,000, he has already withdrawn 25,000. The balance is just 20,000 right now, right? Now, let's say on 31st March 2024, his wallet balance comes to rupees 1 lakh. His balance is now 1 lakh, and now he is not withdrawing anything. During the year, he has already withdrawn 25,000. During the year, he has already withdrawn 25,000. Now the balance is rupees 1 lakh. Now, at the end of the year also, TDS provisions will apply. So 194B will apply over here also at the end of the year. How? We will see whatever is how much is the net winning, whatever is the closing balance, plus amount withdrawn. This is a simple formula which you can easily make it yourself. Although it is given in the in your book also, you have to learn that, but I don't think that there is no need to learn that. It's a simple formula. Whatever is the closing balance plus amount withdrawn minus deposit minus opening balance, because we are not going to tax the amount which you have deposited because that was your money. Opening balance we are not going to tax this time because we have already taxed the closing. It was opening balance for this year was the closing balance of last year. We have already taxed last year, so we are not going to tax on the opening balance, right? So net winning is closing balance is 1 lakh. Amount withdrawn is 25,000. Minus deposit was 20,000 and opening was 0. Correct? Do you agree with me? So the net winning is closing balance 1 lakh. Amount withdrawn is 25,000. Deposit is 20 minus 0. This makes 1 lakh 5,000. So your net winning comes to this amount, I'm running short of space, so I'm writing it over here. Net winning comes to rupees 1,05,000. Rupees 1,05,000 is net winning. So this is the winning of the year. This is the winning for the year, which we have computed at the end of the year. How much TDS we have already deducted on which amount? Sir, during the year, this person has withdrawn something, and on that amount, we have already deducted 5,000 rupees. On this 5,000, we have already applied TDS, right? So out of this net winning, this is the net winning for the entire year. This is the net winning of the entire year. Should we deduct TDS on 1,05,000? No, we will see that during the year, if we have taxed anything, we are not going to tax it again. So out of 1,05,000, 5,000 has already been deducted. So now the amount of TDS will apply on minus 5,000, because we have already, this is the net winning of the entire year, right? So on 5,000, we have already levied TDS at the time of withdrawal. So here now the TDS will be on 1 lakh. So at the end of the year, we will apply 1 lakh. During the withdrawal, we have already applied on 5,000. So total it was 1,05,000. Even if you ask me how much he has won, actually, if you ask me how much he has won, let's say it's your wallet, right? You have played this game. So tell me how much you have deposited. How much you have deposited? So 20,000 I have deposited. Okay, I'm keeping it one side. How much you have withdrawn? The 5,000, sorry, 25,000 I have already withdrawn. And 1 lakh is still the balance. 1 lakh is still the balance, right? So this is 1,25,000 is the total wallet, I can say. If you would not have withdrawn, then at the end of the year, the total balance would have been 1,25,000. You don't have to do this calculation. I'm just explaining you how this 1,05,000 came into picture. So I'm just explaining you that you have already withdrawn 25,000 rupees. 1 lakh was still in the closing balance. Let's say if you have not withdrawn anything, the closing balance would have been 1,25,000, right? And what is your net winning? So 20,000 is my money. In this closing balance, 20,000 is your money. So whatever is the remaining amount, 1,05,000, this is known as net winning. Simple. So I have also explained you other way around also. Correct? Although you don't have to do this in your examination, there is a simple formula which institute is giving, which this law is giving. This is the simple formula. You have to just write it up. But I'm saying that you please don't learn this formula by heart. You just apply your logic. So whatever is the closing balance plus amount withdrawn minus deposit minus opening balance, this is your net winning. So at the end of the year, just see whatever the amount which has already been deducted, you don't deduct TDS on that again. So 1,05,000 is the total winning for the entire year. On 5,000 it was already deducted, so you have to deduct up on only 1 lakh rupees, right? Although if you would like to write it down, you can write it down, but I have made it in a very hodgepodge manner. If you still, you can write it down. It will be beneficial. But I'm pretty sure that this question in this detail, examiner will not ask you. Examiner will simple ask you, okay, I'm coming back. Examiner will simply ask you that how much will be the TDS, at what time it will be deducted. So you should understand whenever this amount will be withdrawn, it will be deducted at that time, or at the closing of the year also TDS will be deducted, right? And if yes, if this winning is in the nature of kind, then you understand that we have to make sure that first TDS should be deposited, then only we can release that amount, right? So if you look at it, section 194BA, winning from online games, person responsible for paying income by way of such winning. Who is responsible? The person who's the organizer of that app, the person who is maintaining that app company. TDS deducting can be any person. Rate of TDS would be 30% on net winning, right? Lower rate is not applicable. Lower rate means 197 or 197A is not applicable. Time of deduction at the time of withdrawal from the user account also TDS will be deducted, as well as at the end of the financial year, right? And on the remaining amount, understand, on the remaining amount, right? You calculate the net winning, and whatever is the amount which you have already deducted at the time of withdrawal, please don't tax it again, deduct that, then you will be able to get the answer. So I have also written the formula. Net winning is equal to amount withdrawn plus closing balance minus amount deposited by the user minus opening balance, right? So these three sections are quite similar. What is the similarity? The rate of TDS is 30% in all these three sections. Second is whether the person who is winning this amount, that person is a resident, that person is a non-resident, we are going to deduct TDS at a rate of 30%, right? There, 194B and 194 double B, the threshold limit is 10,000, right? Okay. I think I'll continue this lecture in my second part, right? So we can keep up to this particular section. Then I would request you to read all these provisions which we have already discussed. Then we will continue in our next lecture. Till then, thank you so much. Bye and take care.